Hello and welcome. You're watching the first business lunch of 2020. I'm Mangla Malu. With me is Ekta Batra. Wishing all our viewers a very happy new year. Hi Ekta, good afternoon. Wish you a very happy new year as well.
Well, same to you, Manglam. It just turns out that, I think half the market participants are also celebrating, because just look at the kind of participation that we're seeing for our markets. The volumes are absolutely abysmal at this point. The cash market volumes on the NSE just in the past hour is built up only by around an incremental 3,000 odd crores or thereabout. So total stands at around 12,800 odd crores. On the BSE also just about at around 675 odd crores in terms of the cash market. It's an annual phenomena where it is only us trading on on New Year's Day. So volumes are generally low, participation is generally low, but stocks continue to be in focus.
Absolutely, and to rub salt in our wounds, we have some interesting visuals coming in with New Year celebrations all across the world. There you have people celebrated their New Year. How they celebrated their New Year, that I think is Dubai, the Burj building. You have, this is Mumbai, Gateway of India, of course, a fair amount of crowd out there. That is Sydney, I believe, and we have the United States as well. So that's how the world celebrated their New Year. Most of the world currently post the New Year is asleep right now, but we are here trading. That is Paris.
Yes, absolutely. What gorgeous visuals with fireworks, which you can see on your screen. So the entire globe, in fact, celebrating the end of a decade and the end of 2019.
All right, after feasting our eyes over those visuals, we come back to work, and this is what we have on our radar. Infra stocks, they're in focus. Larsen & Toubro is among the top Nifty gainers. This on the back of a big infra push announced by the Finance Minister yesterday. Anisha Jain joins us with all those details. Anisha.
It was a happy new year for the infrastructure stocks as well, because the finance minister came out with big bank announcements for the sector. The big one being that the government is looking to spend 102 lakh crore on infrastructure sector over the next 5 years. And this is going to be front-ended because in FY21 and 22 is where we'll see the peak of investments happening. The focus continues to be on energy, roads, urban development as well as railways where 70% of total investment is expected to go into. Other than that, they also came out with a slew of reforms to improve the funding situation, because that has been the key challenge for the sector. So now the government talks about revitalizing the bond and credit markets, and this they are doing through a credit enhancement fund. Other than that, they also talk about ensuring sanctity and enforcement of contracts, because remember, this was a big worry after what happened in Andhra Pradesh. Other than that, there are talks of institutionalization and efficiency of dispute resolution and revitalizing the asset monetization, because the government wants to shift focus from owning assets to really constructing assets for NHAI as well as the EPC contractors, and that is why the government is looking to offload the heavy investments. Apart from that, we had word with a couple of managements as well as bankers in the earlier in the day to understand what the challenges are. Now, NCC tells us there is a big problem when it comes to bank guarantees and getting letter of credit, etc., and that is also on account of the fact that the receivables from centre as well as state governments continue to mount. And this is something that was voiced again by the bankers as well, who said that they are looking to lend to infrastructure sector, but they are only averse to it because the receivables are higher, and that is why they come as risky assets. So overall, of course, we need to track of how the funding of this really pans out, because that continues to be the key challenge for the sector.
Okay, all right, Anisha. Thanks very much for that. In fact, staying with the story, we spoke to YD Murthy of NCC, who joined us earlier in the morning, and he says that the delay in payments continues to be a chronic problem for the sector. Take a look.
Banks are very reluctant to provide these long-term bank guarantee limits for various construction companies. And private sector banks, actually, they look it as a big risk. They are not at all participating. And public sector banks have already got a big exposure to many of these companies, and they don't want to add to that exposure. So this is quite a big problem right now. When a work is done and the bill is submitted and bill is certified, there should not be any further delay in payment of those bills. That creates a lot of problem, and also it hurts the economic cycle also.
All right, that's not all. In fact, we also tried to get the lender's view. We spoke with Raj Kiran Raj, who's the MD and CEO of Union Bank, and also Sunil Srivastava, who's the former Deputy MD of the State Bank of India, to know what they make of the government's mega infra push. Let's listen in.
I think retail will never give us the kind of the push what we need in the credit, because like if you look at the housing loan portfolios and all that, they're all between 15 to 20% of the book. So infra as such actually like pushes a lot of other credit also. So but for us it is around 11% of the book. But then we are not shrunk that book. It is only because of certain recoveries and all that, and maybe write-offs, the book is shrinking. But otherwise, we are taking fresh exposure. And see, this is the only area we are getting certain large credit proposals. Despite our push, actually the investment in bonds is not happening across the spectrum.
It's indeed a laudable effort to actually collate all the projects, both in the economic and the social sectors which are available. But the key point is, and they have also recognized why it's, most of the infrastructure sectors projects have actually gone beyond cost and time overruns. The reasons for that, it's a very pious intent. What would inspire the confidence for participation from the private sector, including funds from outside, would be the certainty and predictability of cash flows.
Okay, well, that's on the entire infra push. But let's shift focus to a CNBC-TV18 exclusive now in what looks like the first M&A deal of 2020. Sources tell us that Adani Ports is looking to acquire 72% stake in Krishnapatnam Port from existing investor CVR Group. Nimesh joins in with all the details on this story. Nimesh.
This could indeed be the first large M&A transaction of 2020. And I understand that Adani Port is very, very close to acquiring Krishnapatnam Port. They're basically going to acquire 72% stake from the existing promoters at an enterprise value of close to 12,500 crores. Now, that would mean that they're valuing the deal at close to 10 times EV/EBITDA on the current year earnings of Krishnapatnam Port. With this acquisition, not only they increase the foothold into the East Coast, but Adani Port will become will be controlling close to 1/3 of the volumes of port business in India. Award on Krishnapatnam Port, it's the second largest private port in India after Mudra Port, and they manage close to 40 million tons of cargo across 10 terminals. Officially, Adani Port has declined to comment over story, but what I understand is this deal is going to get closed very soon. Post the transaction, Adani Port will manage close to 350 million tons of cargo. Now, that's been their long target for FY20, that they wanted to achieve close to 400 million tons of cargo by FY20. So with this acquisition, they'll be probably very close to achieving that target. And as I said earlier, it's going to be EPS accretive deal simply because they're buying at 10 times EV/EBITDA on current earnings for Krishnapatnam Port.
All right, Nimesh, thanks a lot for that. So that is the first big break of calendar year 2020. But among other stocks which are moving around, Dishman Carbon has been locked in lower circuit on reports that the IT department has found trail of unaccounted cash. The management also spoke with us a while ago. Ekta is here with all the details. Ekta, ever since the IT news first broke, the stock has what, halved, more than halved?
Well, yes, and there was a tepid recovery which took place after they held an institutional call or a call with institutional analysts also. So that helped in terms of assuaging some concerns. But now there are fresh reports indicating that the IT department has found a trail of unaccounted cash of over 160 odd crores. The total cash trail in the case is around 327 odd crores. The team has found and seized valuables worth around 1.4 crores as well. And separately, the department has collected evidence according to reports of bogus loans, advances, purchase transactions, commissions, etc. There is a CA firm in Ahmedabad which is also under the scanner. And apparently these reports indicate there's no evidence of rendering services which could be to justify receipts. Also, forged transactions and property dealings could connect the company finances to a previous case. Now, it's important to clarify that the management did speak to us and they did say that they have not received any sort of communication from the IT department. So, and they are in fact awaiting any sort of statement from the IT department. So that's important to note. In fact, let's listen in to what the management had to say themselves.
There was one which happened 2 weeks back, and afterwards nobody has come or contacted. It is a surprise to me because there has been no communication, no letter, no one-to-one chat. They have to send me the statement because we have verbally whatever we have to say during the statement, we have told them None of the statement says about this money. Cash withdrawal are all from the cash drawn from the accounts of tax-paid money.
All right, so that's about Dishman, but take a short break, come back. We talk about Bipin Rawat, who takes oath as India's first Chief of Defence in a ceremony earlier today. That and lots more when we return.